Hi there, Ross. Welcome. Mic check.
Hi, how are you? Can you hear me?
Yeah, I can hear you loud and clear. Thanks for coming on. I
Okay.
appreciate it.
Hey, no problem. No problem. Thanks for having me.
Yeah. So, good afternoon or good evening, Whale Point Talk community, wherever you are. My name is Noah. I'm here today. Excuse me. I'm here today with Ross Gerber. I hope I'm pronouncing that correctly, Ross. And
That's
before we
correct.
get before we get started, Ross, can you give us a quick background into your origin story, your career trajectory, what kind of work you do? I think the audience members would love to get up to speed on that. We can dive into different topics that I wanted to discuss today.
Ooh, my origin story. Um, well, I was born in LA, and back when I was growing up was a crazy period of time, the 80s. And my parents taught me about investing, and my grandparents, um, mostly my grandfather, because he was retired, so it was quite interested in how come he didn't have to work and my dad was working so hard. And so he showed me his stock certificates, and I was like, wow, this looks pretty cool. They just send you money, and back then you'd get your dividend checks in the mail, and my grandfather would go to the mailbox, and there'd be like checks for like 150 bucks and 200 bucks, and I was like, wow, this is really cool. My dad was a dentist, which appealed to me zero because I didn't really want to clean teeth or whatever. And so I started sort of investing my extra money in the stock market. I would work, in my summers, in between school. I was a waiter. I delivered pizzas, and I would save my money and I would invest it. And my mom would help me do that. And then I decided I would go into business. So I thought, what's the best business school in the country? Wharton School of Business. I should go there. And so I got into Penn and started going to Wharton. And then I actually didn't like it very much, because I was very entrepreneurial, and what they were teaching there was much more like MBA type stuff. And I was like, not that excited. So I moved over to Annenberg School of Communications and started studying media and communications, which turned out to be a great, thing. And I learned from some of the best people in the media and the communications industry. Um, and so when I graduated, I actually thought I was going to be in the music industry. That was my goal. I was pretty bold back then. I sent a letter to a guy named Mike Eisner, who was running Disney, and I said, I want to run your music company. And and he was like, yeah, right, but I'll give you an interview. And it was really hard to get an interview at Disney back then. And I started working at Disney, and then I didn't like it because they were moving very, very slow. And I worked at Atlantic Records for a while, and this thing called Napster came out, and I was like, wow, digital music is incredible. It's so much more efficient. And the people at Atlantic Records were like, we sell CDs, kid, online, music is never going to make it, and this and that. And I said, I got to get out of this industry. And so I decided to get in the investment industry and invest in technology because I saw the technologies that were happening, and I realized it was a huge opportunity. So in the 90s, I joined an independent investment firm called Sun America Securities, which had a trading program where I could get licensed and sell retirement plans, basically. And and I started investing at, as a professional, at probably the best point in investment history that I've experienced, which was 1994 to 2000. So, you know, I was really fortunate to see this wave. And when I came into the industry, there wasn't one computer on any desk in my firm, and we would use typewriters, pens and paper, and telephones to do everything. And then I brought in a laptop and started online trading in 1995, 94, with Charles Schwab, and I had a Windows 95 laptop, and everybody was like, "What are you doing? You're you're trading stocks, online." And I was like, "Yeah, this is going to take over, and soon we'll all have computers on every desk, and everybody's going to have a computer." And I started investing in Dell, and Gateway, and Microsoft, and AOL. And then the internet came out, and I was like, obviously that was huge. AOL was one of my first big scores, and by the time I was 28, I was running the firm I started working at, and I was overseeing about 250 investment people, investment professionals. I was probably one of the youngest people at the company running it, and that was a great run until obviously the dot-com bust. So yeah, from 2000 to 2010 was one of the most difficult periods of time in the stock market's history. So I had this wonderful, great run to start my career, and then and went through probably one of the hardest periods of time with September 11th and the dot-com bust and a 3-year bear market, and then we had the real estate boom, and then the financial crisis. And when the financial crisis hit in 2008, it was the worst experience of my life, and when it comes to finance, and just it was just a horrible time for America, and I lost pretty much everything in the financial crisis, and I thought I made a good move by selling a lot of my stocks, and I bought this house in Venice at a 20 or 30% discount. So I was like thinking I was pretty smart, and then my house caught on fire in December of 08, and that was like the low point of my life. Coming home to your house on fire, and your portfolio is devastated, and my company, the company I was working for, was actually AIG at that point, because AIG had bought Sun America, and so AIG was going under. Like everything, it was just horrible. And that was actually the week I met my wife, which is the irony of the whole thing. And when we survived the financial crisis, I just started to start my own firm, and I partnered with one of my partners at the time, Danilo Kawasaki, and we kind of got together and said, enough of this stuff, and we're going to do investing completely different, and build a new brand, and not have all these branches. Have one branch. We're going to use social media and online media to market our services, which turned out to be really, really unique in that most people had not done that, and in our industry that was like unheard of. And it took several years for people to tell us we can't do it, but we were doing it, and we were the first firm on Facebook, and the first firm, and probably on Twitter, and all these other platforms, and we were able to grow Gerber Kawasaki. We started in 2010 with about 20 employees, and about 30 million in assets under management, to now we manage over $2 billion in assets and have almost 50 employees, and still growing at about a 40% annualized rate, my firm. And we are considered one of the most innovative, fastest growing firms in the industry. And we have, a philosophy of working with people of all age groups. We're not the firm that waits for you to be wealthy and then says, oh, give us your business. We're the firm that helps you along the way. So we work with people out of college in their first jobs, helping people build savings plans, investment plans, so that over the next decade or two they become high net worth clients, ideally, and that's been proven to work over time, and so now we're getting a lot of the benefit of working with these young people who aren't so young anymore. The millennials are now in prime earning years and buying houses, and it's really helped our firm prosper. So my career has been, I love the investment business, and I love helping people and working with people building their finances, and that's the best part of my career. And obviously I love the stock market, and I've been trading stocks since I was a kid, and it just came off one of my toughest years, and I've had it happen before, and it's brutal, but we're fighting back now. In January, had a great January, one of our best Januaries ever, and that's where I'm at. Hello? I don't know what happened here.
I think Noah's having a small connection issue. I
Oh,
see him back on. Just
Hey, sorry
give
about that,
him
Ross.
a second here. Yeah,
Yep.
sorry about this, Ross.
I had some technical difficulties. Yeah, I had some technical difficulties, but your story definitely woke me up. and I have a lot of questions. So the first one is, how did that investment mindset that your grandfather had? You said that you noticed your grandfather was working his butt, or sorry, your father was working his butt off, but your grandfather was kind of hanging out, collecting dividend checks. Why didn't that? Why wasn't that mentality passed down to your father? Why did it skip a generation? Or was I incorrect in hearing that?
Well, it was my mother's side actually. My father, both my father grew up really poor actually in Venice, California, and his father, they had a grocery, and my father is a hardworking guy, and he joined the military to get an education and such. So it was my mother's side that was the family of investors, which is, so it was my grandfather on my mother's side, and my grandfather wasn't rich, so let me make this clear. When you're a kid, you don't really realize, um, you know, money as much until I got a little bit older, and my friends, many of my friends were very wealthy, and then I realized I wasn't rich. We were well off by any normal standard, but when you grow up in the extremes of West LA wealthy society, I actually thought I was kind of like middle class until I went to Penn and realized how fortunate I actually was in life. But when you go up to like boats and mansions and private planes when you're a kid, and your dad's a dentist, you're sort of like, wow. So my grandfather wasn't rich. What he did was he lived within his means, and he had a little apartment in the marina, and he loved to sail and stuff like that and play golf, and he just didn't care about having lots of money if he could do what he wanted. And ironically, sadly, he died fairly young of a heart attack, but he died on the golf course. And when I think about my grandfather, I was like, well, he might not, he died, in his early 60s, but like he lived the way he wanted to live. And I don't know if it's like such a bad thing having a heart attack on the golf course. And I kept his clubs for like, I used his clubs for like a long time until it was like ridiculous because they were like so old. But it showed me like financial independence is something that can be achieved, much easier than I think many people perceive, depending on the lifestyle that they choose, where you live, how much you spend. If you want to be a baller, well, you gotta save a lot more money, and that's like why so many athletes end up with like nothing, is they used to a lifestyle that costs millions of dollars a year. And if you figure it out, there's like no way they'll ever achieve it on the incomes they're making. Even a basketball player making $5 million a year, when you think about, I got to replace that income, I need an asset base of over $100 million. And so that's just not realistic, and that never happens. But if you're somebody who says to yourself, hey, I don't have to live in Newport Beach, but maybe I can move up to Washington State and live on the water up there and live within my means. Maybe I don't need, I got a couple $1 million, I could have a really nice lifestyle. So it just depends on the person and their goals. But I think what my grandfather showed me is that you can achieve financial independence at an early.
One of the things that I was always told is, one key to becoming wealthy is to not consistently upgrade your lifestyle while you're also upgrading your income, or rather, while your income is also getting upgraded. You mentioned that you went to the Wharton School of Business, and it wasn't as entrepreneurial as you wanted it to be, and you kind of went off on this journey where you worked for Disney in a bit. It was too slow. You worked for Disney for a bit. It was too slow, and you started investing in 94 to 2000. You made a lot of money, and then you kind of lost it all. I wanted to focus a bit on the financial crisis of 2008, and how it was the worst experience of your life. You said you lost
Yeah.
pretty much. Yeah, you said you. I mean, this is really important though. You said you lost pretty much everything, and
Right.
even the one move that you thought was, "Hey, this is a silver lining. I got this house in Venice." It was like, nope.
Yeah.
That ended up burning, and the silver
Well,
lining
no, the
might have just.
firefighters did save my house. So, you know, to whenever I see firefighters, man, I give these people like a hug.
Absolutely, they're real life superheroes. I couldn't agree more with that.
Yeah.
Silver lining might have been meeting your wife. I mean, but
Well,
but
that was. Sorry.
But no worries. I mean, just take me through just being that low and picking yourself up by the bootstraps. I think a lot of people are inspired by that. I mean, I felt very inspired by that because I think that if you've been in crypto for at least 3 to 4 years, 3 to 5 years, you felt that. I felt that. And so I would love to know how you kind of pulled yourself up from your bootstraps. You got with your colleague Kawasaki, if I'm not mistaken, and you guys opened your own firm. And you guys just really just spearheaded this thing, and you've grown massively ever since. I think you said you started with 20 employees in 2010, 30 million assets, and I missed how much in assets you guys are managing now. It's two something.
Yeah, it's over 2 billion. Yeah.
Whew. So take us through how you know the type
how
of
you
mental
deal
resilience
with shit. Yeah. Well, so there's a couple things. When I was an early trader, when I was in my 20s, I made the mistakes I'm sure all of you have made, where you have margin and options, and you want to increase your wealth much quicker than normal, so you take much higher risks. And so I had made those mistakes in the early 90s on a few occasions, almost wiped myself out when I had very little amount of money. I had, let's say, $20,000 or $30,000 to my name at the time, and I would like be leveraged up to try to turn it into 60, and then I get wiped out on something stupid. And I learned my lesson young. And so one of the things that got me through that was I didn't have debt, like I didn't have margin. And so the fact that I wasn't leveraged and I didn't have debts, I didn't owe anybody money. I did have a couple properties that the people moved out, and that was real bad because I couldn't sell them, and I had to give up one property to bankruptcy, and then like I turned it over to the bank, and then another property, and I lost like 100% of that, and then in another property, the people just weren't paying, and boy, I was paying on. Yeah, it was real bad. I think part of it is, the good thing when you're down so goddamn long. There's only up for me. Like there's a certain point where you're just like, what else could go wrong? And then my house gets on fire. Now, granted, I was hooking up with this girl at the time, and I was feeling pretty good about myself, and not my wife, actually. And when my house caught on fire, and no, I think that we have different challenges, and it's going to happen to everybody, like where you have really hard times. And last year, for a little bit, there were some pretty stressful times as well. And it was so much easier with all the experiences I've had going through it, because like it actually wasn't so bad. So I think what it is if you don't have leverage, if you don't owe people money, and you put yourself in a position where at least where you're starting from is not shaky ground, then you can get through periods of time, because it takes time to resolve these things like the financial crisis. And because I was able to hang on, I think I was down to like 75,000 bucks, which sounds like a lot of money maybe to some people, but at the time I was a multimillionaire. So like to go from being a multimillionaire to $75,000, and then I remember my mom called me and she's like, if you need any help, like I'm always here. And I was like, Mom, I've made it this long in life without asking you for anything, and that's, nice thing about my mom. But, it, I think a lot of it was I was able to make two really good investments. So one of which, when I had nothing else to lose at that point, I was down so big. The only stock I bought was Apple. It was the only thing I trusted. It was the only thing I knew would still be here. And I was able to buy Apple, and I bought a lot of high yield debt. The debt was yielding 27% at the time. I thought it was just a typo. I would sit there with my calculator figuring out yields, and I was like, how is it possible that yields are 26%? 26% on a high yield debt. So I figured if they could pay their interest I would get my money paid, monthly, and if I had Apple, then I could make back my money, and that's what happened. So in 2009, when the market did turn, I think it was March '09, I made back money quickly, like really quickly. So post financial crisis, I made back all the money we lost for clients within 18 months. And I thought it was going to take 5 years, and that was just being able to stay in the market. So part of it, it's kind of like last year, is you've just got to be able to stay in the markets because you can't time like when things are going to turn. Like with crypto, it's the same thing. I've been buying crypto, over the last several months too. And people are like, "You're buying crypto?" Well, I've been buying Bitcoins since it was $200 or $400, and when it goes down and everybody has a heart attack, I'm fine with that. I'm like, oh, I'll buy some more crypto. Now I don't try to make big bets on it. I just buy a little each week, and I add to my position, and I've been building my crypto positions for years. And so when things are real tough, if you have liquidity, you can really take advantage of the opportunity. And that was really what I learned most about investing, and what I would tell everybody and what I teach clients and everything is to always have some liquidity so that when things get tough, you're able to take advantage of them. So if you can kind of wait it out, take advantage, when things turn, you make back your money super fast and then some, and then some. I'm hoping we're going to begin a period similar to that now. So I think mentally is the hardest part. So what I will tell you is something that has gotten me through every tough market is that I actually don't give a shit about money. It's weird to say because I deal with money, but what's really important is your health. What's really important is your family or your friends. And if you have that, you're actually richer than anybody. And so the fact that I had a mom that cared about me, the fact that I found my wife who was my girlfriend at the time, and through this horrible time, she lost her job too, and then like we were both losing everything, and I said, well, why don't you just move in with me, because if we're gonna, if I'm gonna lose everything and you're gonna lose everything, like why don't we do it together? And so she moved in with me, and that, I have my brother, and now I have my kids, which make it way easier. And so like, I just got over COVID, and I lost a good friend of mine to COVID last year. He died, and he was unvaccinated, and it was a horrible experience. And so when you lose your health, money doesn't mean shit. You know how many multi millionaires have horrible health, and it doesn't mean anything that they have money? It just doesn't mean anything because they can't enjoy their lives. And if you think about it, wouldn't you rather be healthy and having a great time and maybe not have a lot of money than be super rich and, sick or whatever? So you have to think about life, and not like, I don't add up my net worth every day. Like a lot of people are like trying to figure out their net worth every day. How rich am I today? You know, if your focus is on money, I think you'll be much less happy. Now, not that I'm against accumulating assets like Tesla when it goes down, or Apple or whatever. I'm all for making money, but when things get real tough, you got to look around and say what's important, okay? And that philosophy of valuing the real assets of your life instead of the financial ones will make you a much wealthier person.
I think that a lot of people identify a little too deeply with their net worth, and they forget about the things that you just said: family, friends, health, things that really do make you rich. And money comes and goes, as I mean, you're a living example of that. But being able to stay in the game is critical. And like you said, you need to have liquidity. Don't over leverage. Ross, let me ask you another question though. When things go hyperbolic in these bull markets, when do you know when? So it's not about like being over leveraged, but when do you know when to sell? Why do people get so greedy?
Well, I wish I could say I nailed when to sell any better than when to buy. And that's what I'm saying. I don't think you can really predict these things, because when you go back to 21, I sit in my office with the rest of my team, and everybody's like, this is crazy. Every idiot selling an NFT, we're doomed. Like, we all knew it, but it's like, if you're not invested, you're kind of missing the game too. And so what we try to do is maintain a discipline with our allocation so that we don't become over leveraged. And so if you keep a disciplined allocation, in a way, you end up sort of forced to sell certain things high and buy low just through your rebalancing. Just like now you're rebalancing out of bonds into stocks, because that's the rebalance from last year. And so if you keep an allocation that you're comfortable with, maybe it's 75% stocks, 25% cash and bonds, or whatever it may be, 80-20, and you just maintain that allocation in good times and bad, it creates a forced discipline in those periods of time. But I've never successfully, no, I've been pretty good at timing the general market in certain ways, but I've never successfully made it work for me as much as I wish it would. And it's mostly because I tend to underestimate how bad things will get. I'm an optimist. So, like last year was a perfect example. Like, if you would have told me the stock market was going to go down, 20, 30% last year, the Fed was going to raise rates to 5%, I would have said there's no chance. Why would the Fed raise rates to 4 or 5%? It's stupid as hell. Well, they did it, and we lost money, and it sucks, and that's life. But I think in general, if you buy great assets and you just look to accumulate them, I'm friends with a lot of these old real estate guys. And these old real estate guys, you ask them, like, what's the secret to your wealth? How'd you do this? They say, I never sell. Okay. And there's such a wisdom to that mentality, that, especially if you're young, to accumulate assets that are super good, like, Tesla's a perfect example, or Microsoft, or MGM, like our holdings, and, good, solid Netflix, Disney. These are companies that are never going to go away. Your goal is just to accumulate them over time. So if they get cheap, you can accumulate more of them. And if they get super expensive and things are kind of crazy, maybe you hold off from buying them or whatever. But in general, if you're not leveraged, you'll have ups and downs in your net worth over any period of time. But when you short-term period of time, but when you look at it over the long term, you have a nice steady rate of return.
So one of the things that you said about Gerber Kawasaki is that you take in people of all income tiers, which I haven't
Right.
seen at many wealth management firms.
None.
Give us some insight into that. I mean, like, how easy it is. I mean, I see that you guys have free initial consultations,
Right.
but how easy it is to become one of your clients and really get the guidance. Because I'll give you myself as an example. I'm the first person, my parents were immigrants, and I'm the first person in my family to actually learn and educate myself on investing. My parents and my extended family were all just about accruing dollars and leaving them in your bank account and just keeping them safe there. They weren't very literate when it came to stocks and bonds, and forget crypto. So would love to know how someone like me, or someone my age, would come and work with you guys.
Well, that's exactly why we started our Get Invested program, which, Brett on this call runs at our firm, and Mia as well, does marketing for us. Um, you know, so that's exactly why we did it. So, we're all immigrants at some point in this country. Everybody came here, and one of the things you realize is that, there was this sort of like white man's club that controlled all the money in the United States. So when you look at historically, access to investing is it was never actually available to the public for a lot of history. So people would have to build their wealth through their own personal real estate, for example. And then in the 80s, mutual funds became really popular. In the 90s, investing became more democratized, and and so people had more access to information to even, like, you couldn't even buy a stock when I started. Like, I would have to go to my mom's broker, who was this like old guy at Smith Barney, and I would be this like kid walk in with like cash or something, and I'd be like, I want to invest like, $10,000 or $5,000. I didn't have that much money, probably $2,000 in a stock. And, and he would look at me like, I don't want to deal with you at all, and so there, so investing in wealth was very much just like, in a way, information was controlled by a small group of people. And so it was very hard for average people to get involved with investing in normal people. That changed. And so when I started in the industry as a 23-year-old, it became very clear to me that the secret to building wealth was starting young. Okay, that's the only thing I know 100% will work is time. And so over any 10-year period of time, you can generate a pretty decent amount of wealth if you're an investor over a 10-year period of time. So I figured if I started really doing this at 23, well, by the time I'm 33, I'll be pretty well off. And that was true. That turned out to be true. Well, 43, I'll be really well off. Well, that turned out to be true. Well, now I'm turning 52 and I'm wealthy as fuck. So that's great. So it works if you think about, like, you're going to live a long time. Like, I posted this picture, like the oldest living woman is now 115. So if I got another 50 years to live, I'm going to be a billionaire, you know? So, like, it's not that I did anything special, it's just like Warren Buffett. He hasn't beat the S&P in over a decade, but he gets richer and richer because it doesn't matter, because it's compounding interest over time. So I figured if I could start a firm and teach 23-year-olds and 25-year-olds who got their first job how to use their 401k, how to use their IRAs, how to save and invest in growth, well, that's an easy way to get a bunch of wealthy clients versus me hobnobbing around some golf course at 23 years old trying to get clients with a bunch of weird dudes, offering them who knows what to be their client. Well, it didn't make sense to me. So I was like, why don't I just work with people who don't have a lot of money? And that's okay, because it turns out most firms only want to work with the ultra wealthy. And there's this whole group of people that actually have a decent amount of money that nobody wants to serve. So I was like, wow, this is a huge market opportunity, but we're going to have to be able to manage money and scale. And that's really, if anything we've innovated in my industry, is managing money and scale. And that's really the challenge that we face constantly, is how do we continually use technology to manage money and scale. And our tech stack now is incredibly good, and our teams manage more relationships than any other advisory firm in the country per advisor. And people don't even think it's possible, but it is if you really use technology efficiently. And so the basis of our firm is, it shouldn't matter how much money you have. If you want to save and invest, we're going to help you do that. And that's how we do it. Now, keep in mind, I'm a deadhead in my heart. I'm not an elitist in my heart. I'm a deadhead in my heart. And so it's like, I figure if we can help as many people as possible, then I'll be wildly successful. And that's been the case.
When was the last Grateful Dead concert you went to?
Well, the real Grateful Dead, Jerry died in, I think it was 95. And so that was the last time I saw him. I think it was the Las Vegas shows in 95, 3 nights in a row in Vegas. And it was just incredible shows. And I can't really go into details of the extreme nature of my behavior back then, but that was the end of that for me too. It was sort of the end of that era for me. And I was working now, and I had to grow up, and Jerry died, and I remember I was actually trading stocks when Jerry died, and the whole stock market kind of stopped for like 10 minutes, for real. Like, it was just like this, wow, and that ended an era. Now, I've seen versions of the Dead, including this version with John Mayer, which I like, for the last 20 odd years, but nothing was like Jerry.
Mm-hmm. And I can use my imagination with respect to you.
Well, psychedelics are really in now again. Everybody's taking these chocolates, and I actually met Tim Leary, once, and spent a night hanging out with him, and this guy Danny Sugarman once, and back when I was in college, hallucinogens and psychedelics were very much being tested in the University of Pennsylvania by lots of crazy people, and including me. And I learned a lot about things, I guess you could say, and I thought it was very helpful for me in my life. Although I would not recommend it to everybody.
That's fair enough. Ross, I wanted to ask about the average client who's in their late 20s and early 30s. And this is a bit of a broad question, but what does the average client's portfolio look like who are under the Gerber Kawasaki ecosystem?
Well, honestly, a lot of it is still very personal to each person, because there are people in their 20s who are very conservative. And we have to say, hey, look, you got this long-term time horizon, but we want people's portfolios to make them happy too, and if people don't like volatility, they don't like volatility. Okay. It's just the way it is. So it's not my job to force people to do things that they don't want to do. It's like, oh, this ride's really fun, you should go on it. It's like, I don't want to go on the ride. Well, sorry, you got to go on the ride. That's not really what we do. So really what I'm really trying to do is build a portfolio that's best for you, but then guide you in a way that you understand the risks and rewards that you take in building that portfolio. Now, it turns out that a lot of young people are pretty conservative, actually, and a lot of my older clients are not at all. They've been investing for a long time, and they like risk. They don't care. They've had a good run. I think younger people have gone through a lot of volatility in the last 5 years. Have been hard. We've had 3 bear markets, the lowest returns I've seen in a 5-year period in a long time. And, it's been a tough period. So if you're 28, you haven't had some easy investment time. You know what I mean? We had a pandemic. I mean, we're coming out of a pandemic still. So you'll tell that story when you're 48. You'll tell the story about the pandemic to your kids and stuff, and people be like, "What? Everybody stayed in their house for months and da 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 da." Yeah, you'll be telling these stories because this sucked. But I think we're coming out of this period of time into a period that could be wildly fruitful and profitable for investors over the next 5 years. Now, once again, I'm an optimist, so take that with a grain of salt. But I also think it's been a really tough period of time, and if you look at the 5-year returns versus the 10-year returns, we're sort of due to get back to the mean, which is closer to 10% average annual rates of return. So I think for me, if you look at my ETF, for example, that gives you an example of like the alpha stocks in our portfolio, the things that are meant to grow. And then we'll take something like that and then mix it with some sort of broader index, typically like the S&P 500, so that you have this sort of like ground floor of investments to cut volatility but still give you growth. And then we'll layer in some level of cash and bonds depending on your risk level to cut volatility. So really what our goal is to minimize volatility and still have good rates of return for clients over time. So for a 28-year-old, in the market today, obviously because PE ratios are, in my mind, a little lower than average and such, it's a pretty good time to be overweight, equities right now. But a lot of people, it's always hard to get people to buy stocks after they've been beaten the hell out of last year. So that's the problem, is you got to manage people's emotions. And that's really our job, is managing people's emotions. Because if you sell your investments and you get out, it will forever affect your future. And so it's okay to make a little bit less return. When your friends are bragging about how much money they're making, it's only a matter of time till they lose it all. So, it's okay to be conservative. It's okay to save your money and care about making smart, safe investments. And you got somebody, a year ago or a year and a half ago was selling NFTs and telling you how much money they're making and you should be trading FTT and all this kind of crap, and now look at them, and so I think one must learn from these experiences that we've seen and say, what's right for me? What do I want out of my portfolio? And ultimately, what most people want is steady growth with less volatility.
Mm-hmm. Ross, I want to talk about specific stocks, particularly Tesla, and I also want to talk about just high level Web3 stuff, Bitcoin, specifically Ethereum as well. But I want to start with the former. You're a big advocate of Tesla and Elon, and I mean, you mentioned Microsoft. Microsoft is a no-brainer for me. Apple's a no-brainer for me. Tesla, as much as I enjoy Elon and I love his mission, Tesla, from what I've read and from what I've understood, has always been quote unquote overvalued. It was one of the most shortest stocks at one point, but it's outperformed astronomically over the last, say, 6 years that I've been hearing this about Tesla. What is it about Tesla that you love so much?
Well, unfortunately, really good companies tend to be overvalued for most of their lifespans until they become mediocre companies, which makes investing in stocks like Tesla sometimes hard because you feel like you're buying high, but you've got to think long term and sort of get through that. But for me, I'm a thematic investor, so I look at each decade that I've lived and I've tried to identify the themes that have really driven investment returns over that decade. So when we entered this decade, it became very apparent to me that with climate change affecting all of our worlds in such a huge amount, that governments and people around the world were going to have to take action to protect ourselves from these effects. Now, there's financial effects of climate change, and then there's real effects of like getting your house blown out in Fort Myers. I was just reading an article about people living in tents on their property in Fort Myers because they can't afford to rebuild their house because they didn't have insurance. Now, who's going to live in Florida without homeowners insurance? You got to check your head. But climate change is going to destroy Florida. And everybody in Florida seems to be in denial of that until they get their insurance quote, and the insurance quote's off the chart because no insurance company wants to insure a house down there. Well, for good reason. So when you think about the effects of climate here on the West Coast, we've had the coldest, rainiest period of time I've ever seen. Just talked to a client in Montecito. They've been evacuated. There's mudslides. It affects us all. Fires. So I was like, what are the solutions for this? And first of all, electric vehicles was a wonderful solution for dealing with climate. And when we found Tesla, in 2013, 14, I got in the Model S and I said, if this electric car and it's really as good as I think it is, like everybody's going to want one because I don't have to pay for gas, so it's cheaper, it drives better, and it solves this problem. And so, we invested in Tesla back then, and it turned out to be a really good investment and continues to be. Seeing this problem become even more acute. And so Tesla has expanded into now other areas of energy storage and solar, which are also crucially important to dealing with climate. So when you think about companies that are dealing with climate, whether it be in transportation or energy, we see this as one of the greatest opportunities over the next decade, not just because now our government and European government and Chinese government are supporting these industries, but also because people want to make this change to a future that's sustainable. And that's, I think, something that's bigger than the governments, that actually people want to make this change to sustainable transportation and energy. So Tesla is the only company in the world that solves these issues all in one and has executed in their mission and will continue to execute in their mission. So we have lots of other investments in climate, but they all are struggling. And, we just had one of our companies go under. Arcimoto was a company that I loved. And, they made these cool little vehicles and we invested a small amount of money because it was a startup kind of company, and they basically didn't make it. And it's super sad to me to see an electric vehicle company not make it because, they could have been making like, mail trucks and things like that. But executing the vision of building an EV company is extremely difficult. And so what Elon's done at Tesla as exactly what he set out to do, which is advance sustainable transportation and energy. And all these other companies are now following behind Tesla, and there's lots of opportunities in it. So climate change is the biggest theme that will shape investing in my mind over the next decade, followed by technology, which has always been a theme that I've invested in since I started. And Tesla's kind of both.
Tesla is kind of both. Ross, what are some of your favorite value stocks right now? What are you buying up in your own portfolio?
Well, if you look at, it's funny because I've got the SEC on my ass for like everything I tweet. It's really fun right now for me. I'm trying to deal with all this. So it's like what I.
By the way, I noticed, based on what you just said there, I noticed that like you have a link with a long disclaimer in your
Well,
bio.
yeah, they
so
made
funny.
me change everything, and yeah, I don't even want to go into like dealing with what I have to deal with, trying to be an innovator in an industry where we're using the Securities Act from 1933 and Investment Advisors Act from 1940. So you can imagine the challenges I've faced my entire career. And you should hear my nervous lawyers calling me all the time, And I was like, the other day, I go, I was watching some of this Madoff nightmare documentary on Netflix, and I was like, it seems like the SEC has plenty of things they could be worrying about more than a few of my bad tweets from 2 years ago. You know what I mean? But granted, some of my tweets are bad, and so they should have been deleted. Blah blah blah. So that said, yeah, I just updated my disclaimer. So when I talk about what I'm buying and selling, they expect that everybody at my firm will not, like if I say I'm buying Steel Dynamics, well, if anybody in my firm sells Steel Dynamics, it's like we misled the public or something. And I've got 27 advisors and I have no idea what they're trading. So I don't even want to get into the complications of me talking about what I'm trading. So I can talk about what we've done in the ETF. That's simpler because that's publicly disclosed information. So I've just recently added Steel Dynamics is a company I've recently added, and we're up on the position. It's a steel company. It's one of my least favorite industries in the world, and it was brought to me because this is the most green steel company there is, and this is the steel company that's also connected with SpaceX and Tesla. And Steel Dynamics is also has the most modernized steel plants of anybody in the steel industry. But after the war in Ukraine, the steel industry was kind of thrown for a loop because a lot of stuff comes from Russia and Ukraine, and that is all cut off. And then when you look at ultimately the demand, once we get growing again for steel, is quite high, and the supply seemed low. So Steel Dynamics is a company we just added, and I really like it. I've been starting to aggressively buy Las Vegas Sands because I was very bearish on China. I thought China's COVID policies was going to lead China into the dumpster from hell, and I guess maybe Xi was reading my tweets and he decided to change his entire policy overnight, and I just was shocked. Like he immediately got rid of all COVID restrictions. They opened up China. They opened up tourism. I was like, wow, Xi, I didn't know you were on Twitter. And I know he probably wasn't reading my tweets, but it was the smartest thing that China could have done, which is rip the Band-Aid off this COVID issue. And the tourism and pent-up demand in China is huge. And one of the investments that's a large investment of ours is the MGM hotels in Vegas, but they also have hotels in Macau that have been basically empty for years. And Macau used to be 10 times busier than Vegas. So just to give you an idea of the size of the Chinese gambling market, it's like 5 to 10 times bigger than Vegas. And it's been just completely shut down. And now it's open. And Las Vegas Sands has the most amount of casinos for an American company in Macau, but they also have the Marina Bay Sands in Singapore. And Singapore is also doing very, very well right now. And in Marina Bay, it's the place to go. If you're in Singapore, it's like you go to Marina Bay and everybody gambles there. And like they've also had the problem of not having Chinese tourists. So one of the main like pivots I've made recently was being very, very bearish on China to being very bullish on China, which is also good for Tesla. But as China gets through, it's like a lot of people are sick in China right now. It sucks. It's a really hard time, but at the same respect, we think within the next 3 weeks or so, 4 weeks, they'll be through the worst of it. And this consumers are already out spending when Lunar New Year was very strong, and the Chinese tourist wave is just about to come. So a lot of people have restrictions on Chinese visitors right now with COVID tests and such, but we expect that to change. And and the business within China tourism and outside of China tourism will be booming. You know, LA, where I live, is a tourist area, and you know, we haven't really had Chinese tourists for years, and it used to be one of the greatest sources of income of tourism for people here in California. So it also makes me very bullish on Disney, which is a stock I've been buying aggressively now that Bob Iger is back. So I'm really focusing on travel and entertainment, music, you know, people going out, people being around people, people having fun. People want experiences more than goods. So during the pandemic, everybody wanted goods. We wanted stuff for our house. We wanted to upgrade our house. But now everybody wants experiences and everybody wants to go. The planes, the airports are packed. And now with the Chinese tourists coming back, we're very, very bullish on what Macau will look like over the next 12 months, as well as Singapore, the United States, and other tourist destinations. So the Chinese consumer is going to lead, hopefully, a new wave of spending, also with goods too, that is not expected in estimates for most companies right now.
I have a good friend that did private equity at I think it's BlackRock, and he said that if you want to make your investing life a lot easier, just look around, look around at what's happening, read the newspaper, look at the trends, and it'll make your job much easier. Ross, I wanted to now ask about. I want to dive into Web3. I wanted to ask you first about Bitcoin. You said you've been buying Bitcoin since it was $200. Can you tell us about when that aha moment for you was? When was that aha moment for you when it came to Bitcoin, and then when was that aha moment for you when it came to Web3 and this industry as a whole?
Well, I was, fortunate enough that a lot of the original guys in Bitcoin, I happen to know, it was not actually through me, it was through my at the time it was my girlfriend, now my wife, and several of her friends were friends with people who were very involved with Bitcoin, and one of which is this guy Brock Pierce. So this guy Brock Pierce is this crazy guy, and I when I met Brock originally, I was like, I don't trust this guy as far as I can throw him, so whatever. And then he starts telling me about his funny money, and I'm like, get the fuck away from me, like I won't want anything to do with it, and I think at the time I was on Twitter, and yeah, this was like I guess it was 6 or 7 years ago or more. And I was on Twitter and I tweeted something about this joke of a thing they were doing. And so Brock was like, listen, Ross, let me take you to lunch. I'm going to explain this to you and I will convince you that this is a huge thing. So I go to lunch with Brock, and this guy's crazy, and he's just like making this whole argument. And by the end of the lunch, I was like, I see how this can work in the rest of the world, but not in the United States. Like, certainly banking in like Argentina makes no sense, or Turkey, or these foreign countries with their foreign banks are garbage. So if I live in Africa, for example, where I think Bitcoin has a huge opportunity, if I live in Africa and you look at the governments in Africa, you'd be crazy to put your money in a bank in Nigeria versus buying Bitcoin. I've actually worked with people in Nigeria, who are Bitcoin people and investor people, because there are a lot of sophisticated investors in Africa. And it's like, why would you keep your money in Bitcoin? And thanks to technology, in your bank, and thanks to technology, people could now hold money on their phones and not have to go through, some sort of like crazy financial institution that sucks. So he sold me on that idea, but I was like, I don't really see how that works for America, and so on and so forth. So, I didn't do much with it, and then I met this guy Cosmonomics, and he set up this it was like it's called the Cash Cycle. It's actually on YouTube still. It was like OG YouTube crypto. Okay. And this guy Kaz was like, I get you don't believe in Bitcoin, but it was like him and Roger Ver and like a bunch of other guys, OG crypto guys, and they were like, okay, do this show with us and we'll have a debate about it. And if you want to watch it, it's called Cash Cycle with a K, Kash. And I watched this thing now in hindsight, and I'm like laughing. Excuse me. And so I get on this thing, and these guys are in masks, and they have like weird locations all around the world. And I'm in my office, and I'm like, is this for real? Who are these people? So we have this whole argument, and they turned out to be incredibly intelligent people. And we had this whole argument, and at the time Obama was president, and I was like, yeah, our system's pretty solid, and we just got through the financial crisis and Dodd-Frank and this and that, and I had all these reasons in my head why there was no need for Bitcoin, having no idea this guy Donald Trump would end up being president eventually. And but what happened was they didn't as much convince me that Bitcoin was going to be so great. What One of the lessons I have in life is that if you're like a crazy person about something, and I generally believe in it, like I'll throw a few bucks investing into it, like okay, now all those people are now like super rich, you know what I mean? Like super rich. And here's me, I took my like 5 grand and I bought like 10 Bitcoin or something. So I had 10. Well, yeah, if I would have kept all 10. But really, like, I was trying to test it because I didn't really believe it was like real. So I was like, what can I buy with Bitcoin? Because if I can't really buy anything, then it has no utility. So the first thing I did, and it's sort of a legendary story, was I bought a computer from Dell. So Dell and Nvidia would take Bitcoin back then. So I was testing VR actually at the time. So I was like, oh, I'll buy a Dell computer, make it my VR computer, and I'll buy an Nvidia like super chip, and I'll use Bitcoin to do it. And I bought the computer for 1 Bitcoin, and at the time that was like 500 or 600 bucks. And I was like, wow, this is incredible. So I spent a Bitcoin on a computer, which that computer finally died actually recently. Is my kid's computer. So I don't know, what is that? What is a $23,000 computer sitting in my trash can right now? And then I had my money on Coinbase. And at the time, Coinbase, which hasn't improved that much since, but at the time, Coinbase was the best of the worst. And that was like Mt. Gox went down, and all these people were going down. So people have to understand crypto has a long history of criminality and abuse. And so I had some problems with Coinbase, and I was like, I don't trust these people, whatever. So I sold more of my Bitcoin, and I just wanted to get my money out of Coinbase, which turned out to be really challenging. And so I kept some of my Bitcoin, and I was like, all right, I'll just keep this. And obviously that's worth a lot of money now. But what it sold me was that there was this way to actually transact business globally without using banks, and that actually has tremendous utility. And if we could get all these criminals out of this business, boy, this could be really great. Well, we still haven't got all the criminals out of this business, have we? And it sucks because Bitcoin would be worth substantially more today if there weren't so many criminals operating in this industry. And it needs, unfortunately, I wish it didn't need regulation, but it just does, because every time digital assets takes a step forward, it ends up having all these criminals basically create issues, which then makes it take a step backwards. And so what I hope is that this FTX disaster will convince enough legitimate players to take the reins of this thing so that it can really go to the next level, because we just can't get it to the next level if we don't have legitimate players, because all financial systems are built on trust. And if you don't have that, Web3 can't survive. Like, we can't have a system of a global digital asset and transaction system where it's decentralized, but yet people have to be trustworthy. And that's one of the advantages of centralization, is that there's some accountability. But with decentralization, there isn't, and that's what creates a lot of the issues. So I think Web3, or whatever you want to call it, crypto, is at sort of this crossroads. And a lot of the institutional players, some have stepped up, but many are they just don't want anything to do with it. And this was like the final straw. So I'm not sure where it goes next, but I know it won't die. But we're continuing to work and move forward in building a platform to hold digital assets for clients through Gemini. I still continue to believe in the core, cryptocurrencies. I've never believed in many of the tokens. I've learned my lessons from tokens many times in the past. But I think that SBF is the Madoff of the crypto industry, and he's created enormous harm to the financial system of crypto. And the sooner that he's jailed, the better. And it just continues to go on. It's like a slow moving train wreck. So as much as I want to be bullish on crypto and what its potential is, it just seems like we keep getting kicked in the gut.
Ross, you and I met in a space where we were talking about just this. It was Margot Rubin's space, and with, I think it was Grizzle Media.
Right.
And one of the things that I wanted to ask you and have you expand upon, rather, is we're in a really bad spot, and the industry looks, as far as the public eye, looks worse than it ever has, because so many more eyes were on it this time around. So many more notable figures were invested in it. It had so much more notoriety in 2021. So what needs to happen? Some of the things I can think of is like the right kind of regulation needs to happen, especially in the U.S., where builders can adhere to rules, but regulators can also regulate and protect investors. But what needs to really happen to move the needle forward and help us recover from this?
Well, the first thing is, as much as the SEC can be a pain, they're very good at what they do. We've been audited by the SEC now twice in my career at GK, and their thoroughness of going through our accounts and our clients is quite good. So I do have tremendous respect for the challenge they face in finding frauds and other issues in our industry, because in the financial services industry I'm in, there's plenty of criminals as well. And so what I feel is that if all U.S. exchanges were subjected to the same types of audits that financial companies like mine are subjected to, that would be a great start. But there has to be money for that, and there has to be a regulator and a system for doing that understand these businesses and how to really identify the good and the bad systems that people have put in place. Obviously, there's many exchanges that have gone through all this stuff and they're still doing fine, and they're probably legitimate, and they would probably welcome an SEC investigation so that they could say, look, we've been investigated and we've gotten through this, and that's kind of how I feel whenever I get through one of these things. It's sort of like, it's not an endorsement by any means, but you survive through this stuff, it's definitely good, because they'll find shit, you know what I mean, if you're doing stuff. So I think that's a start. I think the SEC should be regulating crypto. I don't think it's a commodity. I think it's an asset. I think there are securities, and I think they should be regulated by the SEC. And I think there should be a special crypto division for audit and enforcement, just like for traditional assets. So that's a start. Subject all the exchanges that operate in the United States to go through these audits so that we can verify the validity of these companies. So that's a start. The second thing is, I think there needs to be punishment. Like, people need to see the consequences of this. And the longer SBF isn't in jail, the more damage he does to the industry. These are people who took full page ads out in magazines, Super Bowl ads. They welcomed the whole world to crypto last year, only to be a complete fraud. boy, it's a tough hurdle to get over to rebuild people's trust. So there's millions of people who still have their money lost in FTX, and I just feel so bad for those people because it sucks. And I'm not talking about people who are speculating and this and that. I'm talking about somebody who said, "I'm going to open an account with FTX," and they put $5,000 in, and they bought some Bitcoin, and now they can't get it. Like, it's fucking crazy. It's crazy. And it's not like these people did anything wrong. They saw a commercial on TV with Giselle and Tom Brady. I mean, how could it be fake, right? And then you open up an account, and you're not like taking some high risk or doing something stupid. So it's easy to blame people. Oh, they're just greedy people or this or that. It's not true. A lot of people, young people in particular, and especially people like in the African American community and people who have been traditionally unbanked, people who said, "Hey, this is really a democratized banking system. Like, wow, this has amazing opportunity," and they've been like stolen from, and it sucks. And it sucks. So the quicker they can untangle that mess, find whatever money they can, claw back what they can, and pay back people, the better. Because when you lose your money like that, it takes a lot to want to dive into that pool again. You know what I mean? And it's millions of people. So unfortunately, I think this FTX thing will take a little bit more time before people regain their trust. And part of it is seeing him in handcuffs, being led away to jail where he belongs. But the fact that his partners in the crime have been treated so leniently as well because they just turned evidence on him is also problematic to me. They're literally co-conspirators in the crime, and the quicker they can turn into rats, the better. And they rat out SBF, fine, but they're criminals as well, and they need to see a consequence beyond, oh, you ratted out SBF, so now you can walk free. Like this woman is just a nightmare. It's a nightmare. So I think it's just a time of retrenchment, and you just play it cool, and hopefully in a year, I think crypto will recover.
I hope so too, and I find that if we wanted to focus on the FTX fiasco, you and I could talk for the next 3 hours. But you did talk about the SEC and how they're very good at doing what they do. I've noticed, and from the little research that I've done, that the regulatory state, specifically in the U.S., and with respect to the SEC, Gary Gensler, is they're trying to crack down on an industry that they don't understand yet, and for whatever reason, given all the tools they have available to them, they don't really seem to be designing new legislation or trying to learn. Like you said, they don't have a division that is dedicated, or at least as far as I'm concerned, strictly to crypto. And they're trying to paint this industry with an outdated brush. And I look at places, and although they're not perfect, but I look at countries like the UAE or like Singapore or even the European Union taking a first step with MICA. And I look at our own country where 200 years of paradigm shifting innovations have come out of. And I'm scratching my head as to why we're so slow. And I don't want the next generation of builders and innovators to leave. I mean, if they haven't already, and go to other places and build there.
Yeah, when you say 200 years of innovation, I don't know how much financial innovation we've had versus technology innovation. So I think they're different. Yeah, I think they're different things. We've had very little financial innovation in this country, and that's part of the problem. So you're absolutely right. I don't think there's anybody in the SEC that fully understands how crypto works and all these kind of intricacies. And so for them to regulate these companies, it's like, where do they start? And it's not that they're not capable of it. It's just you have to ultimately, if they were smart, what they would do is hire a bunch of young people from the crypto industry. You know what I mean? Like, who know how this all works. I mean, it's not that hard. That's what I do. If I don't really know how to do stuff, like when it's like Brett on this call. Like, Brett follows this crap like 10 times more than me. He loves all this stuff. So I'm the old guy with my Bitcoin and Ethereum, but then we start talking about stuff and he starts telling me stuff and I'm like, what are they doing with these NFT? I'm like, you're trading what on open seas? I'm like, you got weird characters that you think are worth money, and he's like trading them back and forth. You know, if it weren't for Brett, I would probably know half as much as I do about these industries, because young people drive innovation, and it's very important to understand when you reach a certain age that you need to surround yourself with young people. And I like young people, and I act fairly immature, so it's, easy for me to hang out with a bunch of 20-year-olds. I'm all good with that versus people my age. It's like griping about LeBron for 4 hours. You know what I mean? So, no, for real, for real. There's a huge difference. and and so if the SEC did that, they could build a division, if they wanted, very quickly, that could do this, because there's plenty of young crypto people out of work right now who worked at major exchanges that would be happy to get a good solid government job and maybe help make the industry better. So I think the problem is our government is wildly uncreative and structured and budgeted and political. And the goal of the government isn't necessarily to do what's best for us. I think our government today spends almost all their time figuring out what's not good for us in a lot of ways. And it really feels, if anything we want to change, I'd love to encourage more young people to get involved with government, because boy, you look at the stupidity of the people running our country. Look at how dumb our Congress is. And I'm not saying this from like a Democrat or Republican, because I can name dumb ones on both sides. I'm just saying, like, the average intelligence of the people who run our country is ridiculously low. I mean, scarily low. I mean, I look at these debates these people are saying, I was like, boy, when I was a kid, I was like, well, being a politician, that must be such a big thing. And now I look at it, I was like, boy, it'd be easy I could win a Congress seat, no problem. I mean, this one woman, Majority Green, I think she had 10,000 votes, and she won by 100 votes. And now she's like on all these committees and all this kind of stuff. And you look at our country and the gun violence, and she's running around with a machine gun like she's some sort of Rambo. And I'm like, dude, don't these politicians get it? We have too many guns. So when you see like police violence constantly happening and no solution, like, oh, it's the Scorpion team. And I was like, like, did anybody think a Scorpion team was going to end up well? Like, how if your team is named after an animal that kills people, like, don't you think that would be a bad idea, like, to have that at all? So, like, we literally have this counterintuitive government at this point, where a lot, like, almost like the people vote in these people, and then we have to work against them just to try to get them not to do stupid stuff. So this is a problem for our country, and that's why Singapore is probably a great place to go if you're a crypto innovator. Honestly, I think Singapore is going to do really well over the next couple of years. I think globally, there's lots of opportunity where people get it. Crypto is a global community, and it's flourishing in places like Singapore, and it will. Not to say that America can't do better and change and be more progressive. It can, but we cannot have a bunch of 75-year-olds running this country. We just cannot. It just does not make any sense. Like, they're talking about Dianne Feinstein might run again. And I was like, and I was kind of teasing my mom the other day about this nicely. I was like, God never intended for all these people to live this long. It's like we got too good at medicine, and now they won't leave those jobs and give them to young, motivated people. And I think it hurts this country.
I also feel like, at least anecdotally, a lot of young, a lot of young, motivated people just aren't even interested in politics. They almost have this hopeless point of departure towards it, and they'd rather get involved in something else, which is also not good.
Well, we all kind of now just rather turn it off and like not read the news and just move on, because our lives are actually really good. I was making this point about Twitter, because Elon thinks everybody's on Twitter, and I was like, Elon, and everybody isn't on Twitter. In fact, most people don't use Twitter at all. Most people don't want the news. Most people are perfectly happy with their lives on a day-to-day level, and they don't need this negative all the time. And so they don't want to get involved with the politics. They don't want to get involved with the news, and I totally get it. And I say this to clients even all the time. They call me scared about the debt ceiling. I got 4 calls about the debt ceiling. And I was like, listen, we've been doing this for 100 times. They complain about the debt ceiling. The debt ceiling. We have to pay our bills. It's not a choice. But it's like you read the news and it's scary, and every headline's scary now. I mean, God, the news is so depressing. If you read like the Wall Street Journal, it's super depressing. And so I think a lot of people have checked out from that. And part of that's good and part of that's bad.
Before I ask my next question, audience members, if you're enjoying this as much as I am, go ahead and give Ross a follow. It's been an inspiration so far. I've really loved everything we've talked about. Give Brett a follow. Brett made this happen, and this is a really big space with a lot of awesome wisdom being spewed, or being shared rather, by Ross. Excuse me, being shared by Ross. And if you enjoy the content we put out here at Whale Coin Talk, we'd appreciate a follow on our accounts as well. Ross, we've talked about Elon a few times, and we have, I would love, and kind of on that note, you just brought it up, I would love to know what your thoughts are on how Elon has handled the acquisition of Twitter so far and the direction he's taking it in. I did a couple panels on this, cumulatively spanned over 12 hours. And so it's a very hot topic. There are people on both sides of the coin. They either love it or hate it. I'm kind of in the middle with respect to what's gone on with Twitter so far, but I do think it's a net positive, and I do think it's headed in the right direction. But I would love to hear your thoughts.
Well, I'm an investor in Twitter as well, personally, and at my firm. I believe in Elon, and I very much believe that his vision for Twitter, if successful, will be awesome. And a lot of the changes I was saying today on an earlier thing, some of it is like, well, what's the big deal? What has he done? He's added, I can see how many people watch my tweet now, and everybody's got a blue check. So, okay, great. But he's making the product better, and he's making it better at a pace that's never happened at Twitter. The people running Twitter before Elon were horrible. And obviously Elon's exposing all this, but actually it was his best friend, Jack Dorsey. I don't know if they're best friends, but it was his friend, Jack Dorsey, who is responsible for all this nightmare at Twitter. And, Twitter was a very manipulated, toxic platform. It's probably less manipulated, toxic platform now. And I expect the creator community part of Twitter over the next year will improve dramatically, and his vision for it is great. But I think that Elon owning a media property isn't the best thing suited for him from a political perspective. And when you own a media property, like the Wall Street Journal is owned by Rupert Murdoch, who's an extremely right-wing person, and you can see that in the opinion section of the Wall Street Journal. But if you look at the actual other section of the Wall Street Journal, it's great journalism. And I think when you own a platform, you actually have a responsibility not to be involved with politics at all, because you're the owner of the platform. And he's waded into politics, and just like this Nancy Pelosi thing, and it was just like a disaster. And there's been a lot of blowback and a lot of negativity that he created against him, unfortunately, for being involved with politics. And politics is sort of a lose-lose thing on the internet. And so what concerns me is that he's waded into an area that is not, it's sort of like a lose-lose thing for him. And at Tesla, we sell EVs to a mostly liberal audience. And, whether people want to accept that reality or not, I think Elon's learned the damage he can cause himself by making these gaffes like he did with Pelosi. So hopefully Mr. Beast will be CEO of Twitter. That's my dream. I would man, if he get a young, super motivated person who totally gets YouTube and the creator community, and have Elon engineer the product with his team, that's a huge win in my mind. And it's a win for Tesla to get, sort of Elon maybe a little bit more refocused or rebalanced from the immense amount of efforts it's taken to sort of rebuild Twitter. So I'm hopeful, that things will work out really well. And I think Twitter is the best social media platform out there. I think Instagram and Facebook are done. I think they're just boring old platforms that sell you crap. And Snapchat seems to have lost all its growth. And now we have this new Chinese toy called TikTok, where it like kind of lulls you into this weird semi-comatose state with lots of videos, and then like feeds you propaganda and advertisements. But I think TikTok is really cancerous to intelligence, and so I love the fact that this is a Twitter space, and it has 600 plus people on it, and it works pretty flawlessly. So I give them a lot of credit on the engineering side of making a great product that I think needs to exist. I think there needs to be a public place for ideas and news. It is a hugely important tool for me as an investor for getting actual information directly from sources. Just like many people who follow me, you're much better off following me. I mean, every other news agency might call me, and I might be in the news every day, but you can see what I'm thinking every day on Twitter, firsthand. You don't need to read it in the Wall Street Journal or whatever else. So, and they read it actually on Twitter. So the whole media is on my Twitter too. So it's like when I tweet something, it's in the news, and it's like, why wouldn't you just follow me on Twitter? So Twitter's, in my mind, the most important source of information in the world globally, and it's proven once again for especially real time information to be, hugely important. So I'm glad. I'm happy that it's in the hands of somebody who's extremely competent, working very hard to make it better than the way it was before. But it's been a painful process for sure.
I would love to see a new Twitter spearheaded by Mr. Beast, the CEO. I also but I have discussions with my girlfriend about why I'm not as present on Instagram versus Twitter. And she's like, that's where all the people are. That's where everyone is. But it does seem that when I spend a little time on Instagram, I just feel like the whole ecosystem is stagnated. And don't get me started on TikTok. Again, we could have a 3-hour space on TikTok and why I don't like TikTok. But I wanted to, Ross, pick your brain.
You can get like an hour back of your life just by giving up Instagram. Like I gave up Instagram and Facebook a couple of years ago, and I went because I had COVID. I was like super bored and alone. I got to the point where I was like, I'm going to look at Instagram again, and it was like all the same people that I gave up 2.5 years ago are still posting the same garbage, and I was like, I didn't miss a thing. It still sucks. I still, I don't need to see all these girls. I see all these girls. Thank you. I'm married. I don't care. You know what I mean? And it's like, what is it? It's like a bunch of people talking to themselves. I don't know. So I much prefer Twitter. I love this type of space where anybody can come up and ask a question and be involved, and I think democratizing information is just as powerful as democratizing financial advice or anything else. So Twitter is done a great job of democratizing information where anybody can figure out what's going on anywhere in the world and follow great sources all over the world.
Right on. Couldn't have said it better. And I've also a while ago distanced myself from IG, never really got into TikTok, Facebook as well. But I think the ceiling for Twitter is still quite high, and I'm excited to see it continue to grow. Ross, I wanted to ask you now about ChatGPT, but more broadly, the future of AI tools. I have a mentor who is about 15 years older than me, and he said that if you want to be ahead of the curve, start to learn how a lot of these AI tools work, find ways to make them work collectively, and you will make a lot of money in the future. Well, what are your thoughts on AI?
Well, that's one of the main themes from an investment perspective that we're focused on over the next decade. And it made me really happy to see Microsoft take the lead with OpenAI, because I own Microsoft stock, and they've been working on AI tools for a long time. I think there's a convergence of technologies happening right now, which is a combination of hardware and software, which is best illustrated by Tesla and full self-driving, where you have a robot, which is a car with a brain, and it's learning how to drive over time. And ever since I started using full self-driving, it gets better and better every 2-3 weeks. It's like incredible to watch this development, be a part of it. It's still not 100%. It learns, it gets better. And I was like, wow, this is incredible. You take hardware, you merge it with AI, and it can learn. And all of a sudden, all these tools that are not AI tools could be really useful. And a perfect example would be something like Siri. Siri is the worst tool ever created by Apple. And when you look at Alexa, it's the same problem that they had with Amazon. It's also a piece of crap. And when you look at the way the technology was built for Siri, it was really not an AI technology. It was really built off like, oh, it asks for this, then answer that. If it asks for this, then answer that. So it's really like a programmatic type of learning where it's like, okay, what are the things people are most likely to ask and what are the easiest answers for that? But most of the time, Siri does not give you what you want. So then you have AI, which is the idea of computer learning, or where the inputs and the experiences that the technology has improves its ability to tell you a correct outcome. And the more information, the more data that's fed into this thing, the more powerful it gets. So if you think ChatGPT is interesting, imagine when it actually gets a ton more data, right? It's like it just gets better and better and better. And I think people have been mostly fascinated by the idea of the concept of school being a tool to learn and regurgitate information, we can now say is over, right? So with AI, my kids haven't figured this out yet, but it'll write reports and whatever. So the idea of like, tell me about the Civil War, and ChatGPT can just tell you like a whole history of the Civil War. Well, do I really need kids to understand how to regurgitate the history of the Civil War? So it changes education in a very positive way, because what we really need to learn about the Civil War of like, why did this happen? What were the factors, the human factors that were involved on both sides? Why did slavery exist in the first place? Like, we don't talk about that in history. Where did it come from? Why did it exist? Why was the South so wedded to it? Why wouldn't they change? There's so many issues that people need to understand in history that are a lot deeper than the Battle of Gettysburg and what happened. And I think if we adjust our learning from regurgitation to understanding the conflicts and the challenges of history, for example, it will be a huge win for society. But what I think is on the verge of a lot of things that we use are not smart. And if you add any ability to these things, its utility increases dramatically. And we're going to see this across many areas, whether it be in education, whether it be in medicine or whatever. But, computers have enormous potential to make humans a lot better at what we do. And this is really the coolest part about all this stuff, is being able to call up information that you might want or need like instantly, so that you can use your brain, your critical thinking, your creativity. That's something that computers will never be able to replace: ingenuity. And then how do I take this information and like make it more valuable? And so the more tools we have to make our lives easier and save more lives, for example, the better. And full self-driving is a perfect example of a tool that's AI based, that will save potentially thousands and thousands of lives. And we have so many car accidents in the United States. The upside to it is great. So the fact that this one talks and puts out information has captured people's imagination, but that allows investors to put more money into these things, because now society really likes it and sees its utility. So we're just at the cusp of what machines will be able to do. You think about, even my oven, how, it doesn't know anything. I cook the same thing in it every day. Why can't it just know, And it's like, my car knows, my plaid knows everything, So when you get in a Tesla full self-driving Model S, it's the most advanced vehicle in the world. And then I was driving this GMC with Apple CarPlay, when I was in Hawaii, and I was like, oh my God, like there's such a huge upgrade that's going to happen in our society over the next decade to intelligence-based things. And it's everywhere from, running a train in the aircraft, think about the air traffic controllers. You think about any complex systems, management, healthcare. Boy, there's enormous potential of the applications that are being developed today.
My hope is that sooner rather than later, AI would be able to allow humans to create in ways they never thought possible, tap into untapped pools of creativity, and also give us more time to do human things. You think you made a great point about education and how so much of our education system currently, especially K through 12, is about absorbing in the information and regurgitating it rather than spending the time to actually learn it and apply it. So super excited for that, and love the way you broke it down. Ross, really quick, can you tell us about your Tesla, your Model S, and how good is that self-driving? Like, can you get on the 101 and just kind of go for hours and take your hands off the wheel and it does the rest?
Well, yeah. I mean, first of all, the 101 is not full self-driving. That's autopilot. So Tesla's mastered freeways already. So if you get on any freeway and you're driving, LA to San Diego, and you put on autopilot, it works perfectly. There's no issue. The biggest issue is not falling asleep, okay? Because it's like it works that well. I have 100% confidence, but full self-driving is more like taking my car down my street with the 7 construction sites and the cones and the dudes standing in the way, and then cars are like backed up, and then I got to make a left turn onto Sunset, go down to PCH, make a left onto this really weird like thing that I got to squeeze my car through to get onto PCH. So it's like driving's pretty hard actually in a city like LA. And that was sort of like how I ended up getting it early, because I was like, Elon, my driving score is like, I actually have the lowest driving score of anybody who got full self-driving, because their driver safety score doesn't give you any credit for driving real fast and not having an accident, and I drive fast. So I said, Elon, how is the car ever going to learn if you don't give it to somebody who actually really drives fast and in hard roads and lots of things? So he gave it to me. And when I first got full self-driving, I had to disengage it pretty much every like minute. It's like I put it on, and then wacky shit happens. You have to take it off because it's LA driving. People in LA drive super irrationally on the road. So I was like, okay, how long is it going to take for me to be able to drive to work without any interventions? And we're still not there yet, because the construction on my street is impossible for humans to navigate. And so the idea that the computer would somehow navigate this is like, it's not going to happen. But once I get onto Sunset now and I put on full self-driving, it drives pretty well. And I've been saying this in a few interviews lately. Full self-driving drives better than most 75 year or older drivers or 20 and younger drivers. So if you look at a driver who is 17 or 18 on the road, full self-driving is way safer. If you look at a driver who's 78, 80 years old on the road, full self-driving is way safer. So, we're already at a level that we allow humans of any health level to drive. Like you take a driving test when you're like 16, and then there's not really ever another competency test ever taken again your entire life. Now, every day people die on the road. So let's just say that in a typical scenario in the United States, 40,000 people die or kill other people in their cars currently. So to expect a full self-driving car to never have a mistake or accident is obviously not a reality when driving with other humans. And so there's an expectation for full self-driving that's much higher than what we expect for my mom or your grandmother. And so when your grandmother gets in the car and she drives, don't tell me you're not nervous. I mean, you're like, come on, grandma. It's like you're gonna crash the car, and so full self-driving already, I think, plays a great role or potential role in safety today. Now, I think that if you extrapolate out the rapidness of its ability to grow its abilities in a year, it will pretty much have this down in LA pretty good, like really good. And in 5 years, we won't be driving. You just won't be driving. So it's like you can drive, but you won't need to drive. So I think that's a realistic time frame for full self-driving to be completely autonomous level 4 within the next 5 years or less. I mean, I think within a year, it'll be good enough that a lot of people will use it a lot of times, and it'll have a lot of utility level 3. And right now, I find it to be pretty good. So it's pretty good, but substantially better than when I got it, let's say, a year ago.
Yeah, the progress is exponential. And so you said autonomous level 4 in 5 years. I know I'm comparing apples to oranges here, but I recall the iPhone coming out in 2006. I was still in high school, and within like 3 to 4 years, everyone had an iPhone. When do you think we would see that same trend for self-driving cars, where it reaches its point of perfection, or rather, its point of like, you know, it can really just drive better than most humans? And then when will we see from that point complete mass adoption, where the majority of the cars on the road are driving or self-driving?
Well, you're talking about two different challenges. So first of all, the replacement cycle for cars is much longer than phones. So, it's really much less expensive to buy a phone too. So, you're talking about getting, I don't know, I think there's 15, 17 million cars sold a year in the United States. So, just to have that much hardware, cars built with the hardware and software to do that will take some time. You know what I mean? Irrelevant of even if the tech was good enough. So I think this is going to take a lot of time before, so many cars have it. Everybody's using it like iPhones. iPhone adoption obviously was massive, and for the same reasons of why Tesla adoption has been great. But a Tesla's still $55,000, and that's a lot of money for a lot of people. So I think there's still this challenge to get vehicles that are affordable to people that have the hardware and software to do this. And Elon's charging $15,000 for the software alone. So we're still at a very early stage in this period, and that's why I say you got to look over the next decade.
You mentioned several times, Ross, that you're oftentimes overly optimistic. And with that said, and people taking it as a grain of salt, or taking the following answer to the question I'm about to ask with a grain of salt, do you think that the markets have bottomed?
Well, once again, I don't think about it that way, because it's really hard to be in the prediction business. You feel like a carnival barker. You're like standing in the booth, and they're like, "Oh, how tall is this person? How much does he weigh?" We look at it once again as the Fed is 100% the driver of future returns, right? Because the higher rates go, the sort of lower PE ratios go in the overall market. So we got a PE ratio of between 17 and 18 on the S&P, and we got the Fed at, let's say going to 5%. So the market's already priced that in. So if that's in fact the case, and we don't have a severe recession, which now I don't see, boy, we could have a really good stock market. And yes, the market had bottomed last year, and certainly one from the price action and just the way everything happened, one might think that certainly in the fourth quarter or some point the markets have bottomed. We've had a great January, but once again, I don't think we've fully broken the trend line down yet from a technical perspective. But that said, it's all about earnings that will drive future gains in the stock market, and that's really what I think we need to figure out. So there's the expectation, which are now extremely low, and that's good news for the stock market. And if earnings are much better than expectation, we're going to have a phenomenal year in the stock market. This is predicated on the Fed not changing goalpost again and saying, oh, well, we want to go to 6%, and if they do that, boy, we're not even close to bottom, right? Because they'll drive us well into a recession. Earnings go down, and the market's now got to find 15 times whatever earnings, and boy, that's a bad environment. But I don't think the Fed's going to do that, and for a lot of reasons. What I think the Fed is going to do is what they've said they're going to do, and I think by March, the year-over-year inflation, they use these year-over-year numbers, and it's just garbage. What happened a year ago has nothing to do with what's going to happen in inflation in the next 6 months. So we say, oh, inflation's 6.5%. That's not true. That's 6.5% from a year ago. If you're going to say, what's inflation going to be over the next year, I think we're back down to 2%. So the Fed, at some point, those year-over-year numbers are easy comparisons, and that number in March is the easiest comparison, inflation year-over-year, and that's when the Fed wants to kind of wrap up its interest rate hikes. So it kind of coincides with them kind of declaring victory, pausing, they get to the rate they want to get to, and then everybody can hope that we don't go into a recession, and if we do, they'll just lower rates. And the bond market's saying that they'll probably lower rates as we get towards the middle end of next year. And so if that's in fact where we are in the cycle, this is a very, very good time to invest. The next couple months, we'll see some volatility. But as we go through the year, if this is the scenario, that would be a very, very good one for the stock market, assuming we avoid a bad recession. The reason I don't think we're going to have a bad recession at this point is because actually interest rates have gone down in the real world, despite the Fed raising rates on the rates that they can control. So if you look at mortgage rates today, look at the home builders. We just bought Lennar. I forgot to mention that. Just bought Lennar in the fund this week. I've been owner on and off of Lennar, and the home builders are doing real well because actually mortgage rates have gone down because that's the 10-year. The 10-year is at 3.5. So when you look at a 10-year at 3.5, that's a reasonable rate. And I think markets are fine with that, and the economy is fine with that. So the 2 years at 4.24, and so 4.25 to 3.5. So that's where they should be. So if the Fed continues to raise its rates, they're just going to end up taking those rates back, and the market already knows that. And so you just got to watch the bond market very closely to understand, what's going to happen next and what the Fed's saying. So we have a pretty inverted yield curve, and that does infer a recession. And I don't want to bet against that. But what I see out in real society is a lot of people have jobs and a lot of people are spending money. And as long as unemployment doesn't really tick up, I think we avoid the recession.
Ross, we talked about your origin story. We talked about you building Gerber, Kawasaki, crypto. We talked about stocks, bonds, really Tesla, everything in between. Going into 2023, and I want to be cognizant of your time here. You stayed a lot longer than we had planned. So
well,
I really
I've been locked up
appreciate that.
in my house for a week. I had COVID, so I haven't even been able to talk. I've been like, my throat hurts. It sucks. COVID sucks, by the way. And so I'm pretty excited to be over it, to be honest. So thanks.
Yeah, no, I can tell you, someone that's had it twice, it's not fun, especially the first time. But we talked about a lot of things, and going into the end of the broadcast, I would love for you to tell us what excites you most. One of the end things on a positive note, what excites you most going into 2023 and 2024, next 2 years?
You guys excite me the most. What excites me the most is I feel there's this whole generation of young 20-year-olds that are way better than the millennials. Like the millennials are the most entitled generation I've ever had to deal with ever. And like the 30 and under or the 25-year-old group is just a wonderful group of kids. And I think it bodes very well for the future. And so I have to say, and I do love millennials, don't get me wrong, they're very sensitive. I get that. But us Gen Xers, we're just like built differently. And, I just love the young people I've been coming in contact with in their 20s, super motivated, educated, get technology, grew up with a higher level of technology than my generation, and I just think it's really, and I love the global community. Like, I think if we could just get young people in charge of all these countries, we wouldn't have the war in Ukraine. We wouldn't have all this crap. Putin's fighting a war from the 20th century. This is like crazy. And it's like when this generation, the baby boomers, start to really die, which will be sad because my parents are baby boomers. Um, it this younger generation coming next is really encouraging to me of a great future for the world. And once again, I'm an optimist, but I think this globalization of us, like Elon said something like he wants to make it so like if a tweet's in a different language, when you read it, it would be in your language. And I was like, dude, that would be so awesome. Like the idea that we could all communicate in one language, or in our language, and it would automatically translate, like, could open us up to so many other ideas and so many other like global, like we could solve so many more problems by understanding each other. And I think the younger generation really gets this. And so I'm very encouraged by the young people I've been meeting and hanging out with. And I think if young people stay engaged and they don't check out, and I think if we continue to make ourselves smarter, this bodes very, very well for the future. When now I'm kind of like the old guy, but I really like what I see with young people, and so I'm very encouraged by that. I think it's time for change in the world, and I've been waiting for the 21st century to really start for now 20 what 3 years, 22 years, and it still hasn't really started yet. The 21st century is just getting going. So I'm very hopeful over the next decade. I think it's going to be a great period of time. So once again, you should be investing your money. You should be educating yourself, getting good work and life experience. You should really spend the time, work hard. In your 20s, it just work hard, get ahead. Don't be lazy. You got friends who aren't doing shit. They're never going to do anything. Don't listen to them. You know, make something happen for yourself. And I think young people really get that, and so that makes me very encouraged.
Yeah, even with respect to Web3, I always say Gen Z, Gen Alpha are going to be in the generations that really move the needle. Next big wave of money, innovation, and minds that come into the space. But you can make that argument for the world, as you just did, Ross. Man, I forgot the question I was going to ask.
Nothing. Yeah, but nothing. Remember, nothing good comes easy, and I think that's one of the things that people have to keep in mind. There's a lot of hard work in being successful. I've been lucky about a lot of things in my life, and I'm very grateful for where I started in life and the effort my parents made to educate me and take care of me and stuff. So I did start off ahead. Don't get me wrong, but I can tell you one thing, that I will outwork anybody when it comes to competing, when it comes to being successful. And that's one of the reasons I am where I am. And don't be confused. There's nothing that I won't do to be successful. And there's nothing that I won't do to beat my competition. And that's why I am where I am. And I think if you're tough and you work hard, you'll be unstoppable with the tools you have today.
Mm-hmm. Ross, what is one piece of advice you would tell someone who's just getting out into the real world, graduated college, and inspires to kind of have that same drive and have that same success that you did?
All right, I'm gonna. What I just said is really it. It's hard work. You create opportunities for yourself. It's not going to come your way. But what I really wanted to say is there's a lot of this talk you hear. It's like, oh, it's okay to fail. You fail to succeed. I don't agree with that at all. Okay, it's not okay to fail. You're going to have setbacks in your life. You're going to have setbacks, but you never give up and never fail. Okay, it's really simple. Okay, never give up and never fail. It's there are things I've had big setbacks for sure, but you got to learn from those things and you got to bounce back and you got to come back swinging. But this idea that it's okay to fail, I think, oh, you learn, oh, you had this great, well, no, a lot of times you never get another chance, so I think there's a lot of this sort of like mythology around, startups and this and that, and that's just mythology. You got one chance at life, so don't fail. Work hard, do what you need to do to be successful. You know, sometimes you're going to have to stay up later, sometimes you're going to get up earlier. You guys have, I mean, a lot of people have no idea what I do every day, you know, like how much effort it takes to do what I do every day. Now, I love what I do, but I don't love everything that I do. A lot of what I do is a fucking grind, and including like, I got like so much legal documents just to go through to keep my business running every month. And I literally hate it, but I have to do these things to be successful. So, as much as you love what you do, there's going to be a lot of things that you don't love in doing that, but you got to just do it and grind it out. But I think that it's so important for people to understand that a lot of things get thrown your way that are hard, and it happens to everybody. And you got to just get up and keep going, and that's the secret of life. You know, in the end, survival is winning. You know, and that's part of it. You know, I'm pretty happy to be alive. I'm pretty happy to be successful. I'm most happy that I have this wonderful family. You know, I had to spend a week away from my family, and it was the hardest thing. Like, I didn't even care about being sick. I just, like, it was just so hard being away from my kids and my wife, and fortunately they didn't get sick, and and today, you know, was the first day that I got to hug my children, and I can't tell you how good it was, man. It was amazing. It was amazing. And my wife, and so, you know, as I started this call, the most important thing in your life is your friends and your family, and never forget it.
Feel better. And I really appreciate you coming on today. You shared so much wisdom with us, and you inspired so many of us, including myself in the audience. And I really wish you and your family all the best. I hope you stay in touch. Thank you so much, man, for making this happen. We went back and forth in email for weeks, and you finally got Ross on. So hats off to you as well, Sarah. I really appreciate you guys coming on. It's been a blast.
Hey, thanks for having us.
Whale Coin Talk community. Remember, everything that you hear on these broadcasts is meant for educational purposes only. Nothing is financial advice. My name is Noah, signing out. Take care.
Hey, thanks. Thank you. Have a good evening.